$1.44 billion parked in cash to face Bitcoin volatility. Strategy, the Bitcoin-focused company behind the MSTR stock, has built a large dollar reserve. The fund is meant to cover debt payments and preferred dividends for around 2 years without touching its Bitcoin stack. Analysts at CryptoQuant see this as a sign the firm is bracing for tougher conditions in the crypto market. Soon. Until now, Strategy was known for a very aggressive playbook. It issued new shares, used the proceeds to buy more Bitcoin, and relied on rising prices to justify that constant dilution. That model worked in a roaring bull market, but it becomes fragile when enthusiasm fades and capital is harder to raise. The new move marks a tactical shift toward a dual reserve model, with cash sitting alongside Bitcoin on the balance sheet. By parking $1.44 billion in fiat, Strategy lowers the risk of being forced to sell coins into a deep drawdown just to meet obligations. The company is telling the market it wants the flexibility to hold through pain instead of becoming a forced seller at the worst moment. CryptoQuant argues that a cash cushion sized for roughly 24 months of payouts sends a clear message. Management is preparing for a long stretch of sideways action or even a prolonged slide in the price of the leading cryptocurrency. Inside the company, the Bitcoin portfolio is no longer treated as completely untouchable. Executives now talk about flexibility, hedging, and selective monetization during periods of stress. Strategy might use derivatives to smooth out volatility or even sell a slice of its holdings if markets seize up, though they say such sales would be a last resort. The numbers already show how much the pace of accumulation has slowed. Monthly purchases have fallen from more than 134,000 Bitcoin last year to just over 9,000 in recent months. In the latest update, Strategy added only around 135 coins, a tiny move compared with its historic buying waves. At the same time, CryptoQuant's Bull Score Index for Bitcoin has dropped all the way to 0 for the first time since the previous bear cycle. A reading at 0 signals extreme pessimism and a market that feels tired after an extended run. Head of Research, Julio Moreno, expects Bitcoin to trade in a band between $55,000 and $70,000 over the next year, rather than sprinting straight to new highs. He also notes that the creation of a large dollar reserve quietly raises the odds of Strategy selling coins at some point. If markets stay weak and new capital dries up, the company has now given itself permission to lean on its Bitcoin stash as a backup source of liquidity. Still, management stresses that any sale would be targeted and limited, not a fire sale that dumps huge supply onto the market at once. Traditional equity analysts are weighing these risks and safeguards. Some, including at Mizuho Securities, argue that a predictable cash buffer and a clearer risk framework could make Strategy more investable for institutions that disliked the old, all-in Bitcoin approach. On recent calls, Strategy's Chief Financial Officer Andrew Kang described the dollar reserve as a liquidity risk tool. He said the company can fund operations for more than 3 years, as long as Bitcoin trades near current levels, suggesting the balance sheet can withstand serious turbulence without forcing desperate moves. Even so, big investors have already trimmed their exposure. From the first to the third quarter, institutional positions in MSTR fell by more than $5.38 billion. That pullback reflects concern over Bitcoin's near-term path and fatigue, with a story that once promised endless upside but now looks more complex and mature. For the wider crypto market, this shift cuts both ways. Less aggressive buying from Strategy removes a powerful source of spot demand that once helped propel earlier bull cycles. At the same time, a sturdier balance sheet and the option to hedge reduce the risk of panic selling that could crash the market during the next major downturn. For traders and investors, the key takeaway is simple. One of the loudest corporate bulls in Bitcoin is moving from a pure accumulation mindset toward disciplined capital management. Watch how quickly Strategy taps its share issuance programs, how its Bitcoin holdings change during sharp corrections, and whether the Bull Score Index begins to recover from 0. If demand returns and on-chain indicators improve, Strategy's cash buffer could look like smart insurance that never needed to be cashed in. If conditions worsen, the company now has room to maneuver without detonating its own thesis. Either way, this pivot is a reminder that even the most committed Bitcoin believers must manage risk as the asset class matures. This has been BlockBrief. Stay informed, stay ahead.